Hello and welcome. Thank you for joining us here today. You'll see on your screen, we're going to be learning all about this program here at Columbia Business School Executive Education. This program is Real Estate Investing Strategies, and we are joined here today by our keynote subject matter expert and program leader for this course, Declan Marabella, who's going to tell us all about this program and some of those insights that you can expect. So Declan, would love to invite you in to say hello. Thank you for being here. Would you like to greet the audience?
Hi, everyone. I'm Declan. I'm a subject matter expert and program leader for this course. I'm also a staff associate at Columbia's Business School in the real estate finance section.
If you have any questions throughout the webinar, please place those questions in the Q&A box, and we're going to be following up after the session to answer them. So please don't hesitate to reach out in the question box as well and let us know what's on your mind. With that, let's jump into the program overview. So as we think about this program here, the larger ecosystem that you're joining here is Columbia Business School Executive Education. And as many of Columbia Business School is one of the world's leading business schools, it prides itself on excellent faculty. You're going to see that here in this program, who not only provide students with superior knowledge and thought leadership across divisions and disciplines, but they do in a way that really tailors to what we know works well for adult learning. So Columbia Business School is housed within New York City, the global business hub of the world. So as we think about taking these insights and putting them into practice, no better place here than Columbia, which has that proximity to this global business hub. Faculty are thinking about not only conveying these ideas and frameworks and knowledge, but also doing so in a way that allows you to apply your learning in real time. So that's what you're going to see here in this program. You're joining this grander sort of alumni group here. Folks who've come through Columbia Business School represent over 123 countries. There are 86 alumni clubs globally. Some of the folks have been Nobel Prize winners, founding fathers of the US, 9 justices of the US Supreme Court, 29 Academy Award winners, 4 US presidents, many others. So you're joining this broader ecosystem, this broader community of lifelong learners. This program in particular helps you drive down in this vertical of real estate investing strategies. So as you're looking to bring this knowledge to life, this program is taught by Columbia Business School faculty here and provides you that hands-on learning experience across the 6 weeks that are going to help you to evaluate skills and investment methodologies to support smarter investment decisions. So you're going to gain those industry-leading skills in creating financial models, cash flows, determining values, and measuring returns. And of course, you can see down on your screen some of the stats about the size of professionally managed global real estate investment market in 2021 is 11.4 trillion and is expected to increase at a rate of 8.5%. So never a better time to be learning about this topic. There's a 68% increase in commercial real estate transaction activity during the first 3 months of 2022 compared to the same period the year prior. And as of August of last year, the average annual pay for a real estate investor is $119,000 per year. Some stats as you think about the relevancy of this program, what might this bring to your career? What might this bring to your ability to lead investment strategies at your organization? So this program was really designed for those folks who are looking to do just that. If you're looking to have a better return on your investment for your clients, increase awareness of global investment opportunities, and strengthen brand reputation. You might be a real estate investor. You might be a mid to senior level fund manager and investor, a CXO, a business professional looking to develop your expertise in large scale real estate investments, a real estate professional looking to gain those insights. Any number of these categories, as you think about who is this program for, this is the reason you're here to answer that question. Is this program right for me? So we encourage you again, as we make our way through the program overview, we're going to be covering a lot of information here today on this session. Let us know what's on your mind as you think about this program fit. Is this the right program for your needs, for your geography, your industry, the organization you're in? Let us know here. Our program advisors can help support you with any of your questions related to program fit. So with that, let's go ahead and meet the team. As we mentioned, this program is put together by a team of faculty. We won't go through their specific bio details on today's session, but we invite you to come back and read through these. We're going to follow up with copies of all of the slides here today so you can take a more detailed look. But this course does bring together 3 keynote faculty here at Columbia Business School, each bringing their insights, their knowledge, their expertise, both in academic research as well as industry practitioner knowledge and bringing those global perspectives really to this program curriculum. In addition to our course faculty, this course is taught by program leaders such as Declan, who is here to tell us more about the program. Declan, I'd love to invite you in to tell us a little bit more about yourself, your background, and what brought you to teaching this program.
Absolutely. Hi, everyone. I'm Declan Mirabella. I originally have a background in economics. I studied math and economics as an undergrad and have a master's in economics. For the past several years, I've been working as a staff associate at Columbia's Business School in the Real Estate Finance Division. Real estate is a hugely important topic. It connects really important individual investments to really broad macroeconomic themes. I always thought that was a really interesting topic to pursue. And given how much variance there is in real estate markets and how illiquid real estate can be, I think learning how to invest in it smartly is a really important topic. That inspired me to want to be a program leader and teach this course here.
Yeah, that's great. As you can see, this program is all about people, relationships, really reaching out, networking, coming together, and getting that real-time support. So certainly we appreciate your support of this program as a program leader. And we'll invite you back in a little bit later in the session to tell us more about what is a program leader, what do they do, and how you'll be involved throughout the program here. But to get started, I'd love to hand it over to you for the program specifics. So this is where we get to learn all about this program, the curriculum, what you're going to be learning from week to week. So Declan, I'm going to hand it over to you to take us through the curriculum, starting with what are those key takeaways that folks can expect here from the program. And thanks again, Declan, for being here with us today. Over to you.
Absolutely. Thank you, Marie. So some of the key things you should be able to do through taking this program are going to be understanding how to evaluate real estate, both based on cap rates, which is essentially comparing what buildings are bringing in to their prices for other similar buildings nearby, as well as pro forma analyses, which are really a bread and butter tool for all real estate investors. You should be able to really understand and examine how mortgage financing can affect risks and returns. Almost no real estate transactions happen in cash, so understanding what sort of leverage you can take on and how that's going to affect your investment is really huge. You're going to be able to understand how you can create new opportunities through troubled properties and organizations by applying real estate investing strategies. A lot of this ties into what private equity firms do and real estate investment trusts. And you're going to have a much better understanding of some of the risks and rewards associated with land, especially if you're interested in investing in land. This is really crucial. The real estate development process and some of the tools surrounding affordable housing. Finally, you should also gain the tools to analyze residential property so you can decide whether to buy, rent, or stay out of the market altogether for residential real estate. Sorry, I'm just trying to figure out how to get to the next slide here. Thank you. So now I'm going to walk you through each of the modules in a little bit more detail. Broadly speaking, in the course, there are 6 modules. We start by taking you through some of the basics of building cash flows and how to analyze them. And then we move on to cap rates and pro forma analyses for properties. Module 3 dives a little more in depth on how transactions can be financed and some of the tax advantages around that. Module 4 takes you through private equity and some of the more indirect ways you could invest in real estate. Next, Module 5 discusses housing markets, the buy versus rent decision. And finally, the course wraps up with Module 6, which takes you through land, real estate development, and some of the tools around affordable housing. I'm going to start by describing Module 1 in a little more depth. Module 1 is focused on cash flow analysis. We start by measuring what a building's actually bringing in, the net operating income. Buildings tend to mainly bring in lease revenue, but they also have a lot of costs associated with them, maintenance, utilities, and they can even have other sources of revenue like parking. Additionally, leasing revenue comes with a lot of important risks. Most obviously, tenants can default, they can fail to pay rent. But there are also other risks like vacancies between leases, changes in market rents, or even bigger macroeconomic factors like recessions that can really hurt demand for office space. This module also is going to walk you through some of the different lease structures you can use. In different industries, responsibilities can be split very differently between the owner and the tenant. A retail agreement and a manufacturing industrial plant lease agreement are going to look very different. Issues like property taxes, operating expenses, upgrading, repairing the property. These costs can be split between the tenant and the landlord in a lot of different ways, depending on the lease. understanding exactly what's going on in these lease agreements is really going to help you understand what you're taking on in a real estate investment. And this is all going to build up to this more systemic way of looking at the cash flows of real estate investment in the pro forma. Pro formas break down all the sources of revenue and all the costs by year, and you usually build out projections for maybe 5 to 7 years out from when you're planning on buying the building. And you have to make some assumptions to build a pro forma, but they're really a huge part of real estate valuation. So knowing how you can build one for a property, or even just understanding how to look at one for a property and understand what sorts of upsides and downsides the building could have, is a really important part of real estate investing. This leads us into module 2, which gives us some of the fundamentals of how to actually turn that into a valuation and introduces the concept of a cap rate. The pro forma gives you a great idea of, you're going to have these revenues, you're going to have these costs over the next couple of years, but how do you turn that into a price you're willing to pay for the building, or a price you're willing to sell it for? Two buildings that have the same net operating income, they could sell for vastly different prices depending on where you are. A building in New York bringing in the same revenue as a building in Houston could be worth way more or way less. This module is going to give you the ability to calculate the net present value and internal rate of return for real estate investments. And that's ultimately how you can base your investment decisions. Usually firms have an IRR, or internal rate of return threshold they try to meet. They calculate an internal rate of return for some investment, and then they only invest if it's above their threshold. Essentially, you do this by discounting your future payments, but it also gives you a really good understanding of how sensitive your pro forma should be to different assumptions. Maybe you're making really conservative assumptions around rent growth. Understanding, changing those assumptions and looking at how your net present value changes is a really good way of getting a handle on what sorts of assumptions matter for whether you should buy the real estate or not. They also introduce you to cap rates, and cap rates are an awesome way of estimating a building's property without knowing its full pro forma. Essentially, you just look at the ratio of what a building is bringing in to its price to get the cap rate, and by comparing cap rates nearby of similar buildings, you can get a really good valuation of the building without a ton of data. Cap rates are also an awesome they're an awesome way of looking at market expectations, because areas with really high expected future rent growth are going to have much lower cap rates. So even just looking at cap rates on their own is a good way of gauging where the market thinks the real estate values are headed. So all in all, between these first two modules, you're going to be able to break down what a building is bringing in year over year, and you're going to be able to turn that into a price for the building. And even given much more limited data, you can get a good idea of what buildings are worth through going through these first two modules. Next, we're going to move on to module 3, which involves real estate financing and taxes. As any of you who've ever bought real estate before, you probably didn't buy in cash. Real estate financing is a huge part of any investment, and we haven't really taken that into consideration yet in our pro forma analysis or cap rates. The financing terms can change the NPV of investment from positive to negative, or the other way around. And in understanding how the financing terms play into your investment is huge. There are a huge variety of financing structures, especially in commercial real estate, each with their own upsides and downsides, but you should understand what you have access to and what options are on the table in your investment. For instance, there are traditional mortgages, but even within that, you have mortgages that are fixed rate, mortgages that are floating rate. You can buy mortgage points to reduce the rate up front. You have to understand how much of the principal value of the building you're paying off of the mortgage. And then some concepts that come up in commercial real estate, but really don't show up in residential real estate, such as recourse, which is in a lot of commercial loans, if you default, your lender can take other assets from you. Prepayment penalties, where you can't simply exit the mortgage if you have the full value in cash. You have to pay an extra fees to get out of the mortgage and protect the lender from their prepayment risk. And other structures of debt like mezzanine loans, which pledge equity rather than real estate for the loan. These are all some really important concepts that I think are really good to know whether you're buying the property or whether you're involved in lending the money to someone who is buying a property, what other forms of debt they might be taking out, how that affects the risk and return. And they can also get different tax treatment sometimes. So it's important to understand from that angle as well. This module gives you also some of the tools to look at credit risk. For instance, you might have a great investment, a great property, but if there's a rough economic downturn, a kind of rough time for rents, what you might be more interested in isn't the building's value, but its debt service coverage ratio, which is basically the ratio of the cash that the building is bringing in to its debt payments. Buildings with a really low debt service coverage ratio could be in high risk of defaulting soon, even if they're ultimately valuable buildings. This is important to know because if you're looking for distressed real estate investment opportunities, maybe buildings with low DSCRs could be a good place to look. The loan to value ratio is another important thing you're going to learn about, which is a way of measuring how much of a mortgage, how well secured a mortgage is in the first place. And a really crucial point that's made in Module 3 is how you can amplify your risks and returns with leverage. Just to take a simple example, if you buy a building worth $10, if you buy it in cash and the building goes up to $15, you've made a 50% return. If you finance buying the building with a $5 loan, then if the building rises to $15, you've made $5 on top of a $5 investment. That's 100% return. And that can also go the other way. Taking out more and more leverage can increase your risk a lot. So understanding the dynamics of risk and return with leverage and how to factor that into a pro forma are really crucial parts of understanding the nitty-gritty of any real estate investment. Moving on now a little bit to Module 4. Module 4 covers some of the more indirect ways you can invest in real estate. So up till now, we've just discussed how to evaluate a property that you're considering buying or selling or lending money to someone else to buy it. And these are all crucially important things. But if you're just looking to immediately get involved in real estate without having to manage the building yourself, and there are a lot of options out there for you. Two that they discuss in Module 4 are private equity and real estate investment trusts. These are collectively referred to as delegated real estate investing, since you're not doing as much of the management yourself. Essentially, in private equity, you have these general partners or GPs who raise money from investors called limited partners, and they'll invest in real estate with it. Usually the basic setup is that the general partners charge a small management fee, and then the limited partners get the first, say, 10% of the returns from the investment. And then the rest of the returns are split between general partners and limited partners. There can be a lot of bells and whistles on top of private equity agreements. For general partners, anything they make can be listed as capital gain, which is a huge upside. But the basic idea is that limited partners can often get a really good rate of return without doing much through private equity. That being said, different private equity firms can have hugely different strategies. Some focus on really safe buildings, some have a broad mix, some look for growth assets where they're buying in cities where they see large opportunities for growth. There's a little more risk there. And some really primarily focus on distressed or vacant properties that have gone under, which can go completely to zero, but also have huge upside. Understanding all the upsides and downsides when investing in private equity is huge. Normally, private equity involves a pretty high investment threshold. You can't really buy into a private equity firm with just a few dollars usually. But we also discuss real estate investment trusts here, which are a really different setup. They're investment vehicles for real estate that are subject to a lot of laws. They have to distribute most of their profits every year. They have a lot of disclosure laws. They need to be invested primarily in real estate. But the upside is they get favorable tax treatment. There are two different types of real estate investment trusts. You have private real estate investment trusts, which you have to buy into privately. There could be a higher threshold there for how much money you need to get in. Or you can have public real estate investment trusts. The huge upside of public REITs is that they're really liquid. You can trade them immediately. If the price of a publicly traded real estate investment trust goes down, you can sell it, which is really unique. There aren't many ways to get into real estate that you can do with such a small amount of money and that you can get out of the investment so quickly. This also gives you some of the tools to evaluate the value of REITs, such as their net asset value, and understand whether you're making a really good investment there. I think we can move on to the next slide now. I'm going to discuss Module 5 a little bit. After discussing some of the ways we can do delegated real estate investment, Module 5 focuses more on housing markets and home purchases. I think this is an awesome module because in addition to being relevant to investors, it's really relevant to everyone. It looks a lot at the buying renting trade-off. Suppose you're moving to a new city and you're considering, do I buy a house there? Do I rent a house there? You want to consider a bunch of different factors in this. If you rent, you could be missing out on future house price growth in the city. But at the same time, buying comes with a lot of risks. There are high transaction costs. There are costs of maintaining a property. There are financing costs of buying. The tax treatment is very different. You can write off interest payments if you buy the house. You can't do that with rent. And there are other factors you can consider as well. This module really gives you a great framework for understanding whether you should buy or rent and understanding housing markets a little more broadly. There are some superstar cities that have had really high real estate value growth for a very long time, like New York City or San Francisco. They have geographical features that make land really limited, and understanding how to invest in those and how to pick cities to invest in is a really important tool this module gives you. And we take this module to the end by just looking at some of the other determinants home prices can have as well, like interest rates, inflation, local zoning factors and things. A lot of things go into determining the value of houses. And this module really gives you a good idea of how to take all those into account. Finally, the course completes with Module 6 is on land development and affordable housing. It first goes through the development process. Developers begin by buying a plot of land, but this can often just be a small part of their total costs. If you're considering getting into development, you have to understand construction costs can vary substantially. Local labor costs are a big part of that. Zoning costs and negotiations with municipalities can be a huge part of real estate development. I know in New York City, that's definitely a huge factor developers have to take into account. And there are other soft costs that can come into account, like having to pay for surveys of the land or consultants, and having to pay interest or fees on construction loans to finance building the property. Usually construction loans to finance development tend to be short variable rate loans with renewal options. And it's an important part of understanding the financing is always an important part of an investment. But one really crucial thing Module 6 touches on that I think is really counterintuitive is once you own a plot of land, the decision to start building on it and developing real estate, you can't undo that decision. So it's important to know that when you're taking on maybe a 3-4 year construction project, you're really committed to what demand and rents are going to look like in 3 or 4 years. And that being said, it's often better to really wait rather than develop immediately on land you've built. Oftentimes, if you go through cities, you'll find vacant lots in what should be really expensive real estate locations. In New York City, one of the most expensive real estate developments in the past couple of decades, Hudson Yards. Just a few years before it was built, you had this vacant lot sitting on the Hudson River, on the edge of the Hudson River, surrounded by extremely expensive skyscrapers. It was really confusing to look at. To understand it, you need to know the option value of waiting to develop on land can be extremely valuable. And because of the variability in what a developed plot of land could be, land acts like a more leveraged form of real estate. So understanding what it means to invest in land, the upsides and downsides is really crucial. And that's something you can learn in Module 6. And we also then move into a discussion of affordable housing, which is just a really important modern policy issue. A lot of factors drive affordable housing: speculation, zoning challenges, demographic changes. We discuss them here and some of the possible solutions to affordable housing shortages. Module 6 really discusses that as well. These include things like mandating that a percentage of new units in a building be affordable, rent restrictions, housing vouchers, and some of the other policy tools that come up. If you're considering going into multifamily development or investing in that field, understanding some of the affordable housing policy tools and how they might come up is a really important investment decision or investment aspect of the investment decision. But more broadly, affordable housing is a really important issue that affects everyone, and understanding kind of the dynamics of it helps you get a better sense of the real estate landscape. So I think we can move on to the next slide now. After each of these modules, you're going to get a case study that's going to give you a great chance to apply what you've learned in that module to a real world case. I think learning through lectures and slides is really important, but getting to really apply that to an actual example of an office building and evaluate whether it's a worthwhile investment is really crucial to understanding and being able to apply these skills in the real world. These happen after every module. They're tailored to what you learned in the module. It helps solidify your understanding and, again, gives you some experience. When you have to apply this out to an actual investment, you have some real experience doing it through the case studies. I think we can go on to the next slide now. And now I'm just going to talk about some of the values of the experience. You're learning directly from some of the top minds in real estate investing from Columbia Business School's Real Estate Center. I personally work with some of them, and they're really thought leaders in real estate globally and also great teachers. So you're really learning from the best here. Guest speaker interviews, you're going to get some more insight into real estate investment through some of the interviews that are pre-recorded with investors who have a lot of experience in the field, including David Sherman. And some of the hands-on activities are going to give you real experience, like the case studies, applying your knowledge to real investments and getting some actual hands-on experience that you could carry out to an outside investment or to your next real estate endeavor. Overall, I think this course really teaches a ton of important information. You're going to come out of it really well prepared to evaluate buildings. You're going to understand the upsides and downsides of managing costs and revenues. You're going to have a great sense of the factors that drive real estate prices, cap rates, superstar cities. And even if you're not planning on managing real estate directly or entering into that world, it gives you a great understanding of the delegated real estate investment landscape. So private equity funds and REITs. Essentially, it leaves you really prepared to invest in real estate on either side of as an investor or as a lender to someone who is investing. I think we can go on to the next slide now.
Hi, Declan. Thank you for taking us through the program specifics. More in particular, though, thank you for taking us through the curriculum there and helping to describe how this course is really going to give students the hands-on experience they need to bring their learning to life. And as we shift focus here over to the learning experience, I'd love to invite you back in here in just a moment to tell us more about some of those interactive components. So now that we know what's taught in the course, let's shift our focus over to how it's taught. So as we think about this program, it's a nice blend of synchronous and asynchronous learning. You'll jump into the program. We will release a set of content each week on the same day each week. And you and your peers will have that 7 days to get through that content together. So you'll be in cadence with one another. However, your daily schedule, you'll be able to design that for yourself because much of the content you can touch in on that on your own time. So there's on-demand videos, which are from your course faculty and guest speakers as described. These are brief 5 to 7 minute videos. Again, they're on demand, so you can watch them as many times as you need to at a schedule that works for you, where you really get the core knowledge that you need to then go into the other activities here for the week, discussion boards, activities, quizzes, assignments, their real world case studies and examples, knowledge checks, interviews, other types of hands-on activities that you'll be asked to do that really required you to roll up your sleeves and engage with your learning. So this is deep skills building. You'll learn the knowledge that you need from these videos, and then you and your peers will work together to bring that knowledge to life within the program and also within the broader context of your professional role. So there's a lot of learning to be had here. The 2 words I like to take away when I think of the learning experience here in this program. The first is interactive. So a lot of engagement, a lot of rich discussion and reciprocal learning where you're contributing your knowledge, you're gaining knowledge from your peers, you're broadening your perspective. So interactive. And then the second word is convenient. So really being able to design a schedule that works for you and integrate this learning into your other professional and personal responsibilities. We've designed the program to be highly flexible in that way. The other component here in the program, as mentioned by Declan, we have these live sessions. So there are live sessions. You'll have a chance again to engage in real time. Similar to today's session, all of our live sessions are recorded and then they're put into the platform the next day and available to you on demand for the remainder of the program. So even if you have to miss out on a live session, you'll have that simulated live experience available to you on demand thereafter. A lot of opportunity for you, again, flexible and interactive. So those opportunities are there for you to come in and engage with your questions and ideas in real time with faculty, program leaders, and other guest experts. A lot of rich opportunity here for you to build your network, not only gain that deep knowledge that you need, that deep skills building, and that as you learn shoulder to shoulder with your peers, colleagues, teaching team, and faculty, you'll gain those broadened perspectives as you see these themes coming to life for your peers in their geography, in their industry, and in their professional role. So you get those deep learning, you get that broadened scope of understanding, and all of this prepares you to earn a credential here at Columbia Business School Executive Education. This is a formal credential here, a chance to earn a digital completion certificate. So you'll receive this certificate of completion here. This is an opportunity for you to showcase your learning and your expertise. And certainly for those of you looking to springboard into career advancement opportunities, you'll have a chance to, again, earn that formal credential here from Columbia Business School Executive Education. Now, more so than ever before, we understand the need for lifelong learning or micro-credentialing that really allows you to learn the skills that you need on the job as you go. And that is what this program is allowing you to do, to continue to build your career, stay relevant in the modern workforce, and gain the skills and knowledge that you need as you need it. So no longer thinking of education in this episodic way where you go away to university for several years, but actually breaking that down and making that available to you throughout the span of your career is the direction we're going in as we think of executive education programs. And so we want to thank Columbia Business School for putting this program together, all of the course faculty, Declan, the teaching team, and all of you. So with that, I want to hand it back over to you, Declan, one more time. So as we think about some of those high impact learning elements, I'd love to bring you back into our fireside chat room to tell us more about your role as a program leader and what you envision for the participants here in this program.
Absolutely. So as a program leader, I'll be able to give students some feedback on their work. And what I really envision for students coming into this is, I think, being prepared to make real estate investment decisions in a really informed way. I think the course absolutely builds that, and the case studies really help with that. And hopefully feedback on the case studies will really help refine that as well.
There's a lot of opportunity here to learn from one another and to gain that expert guidance from you. So I know one of the things that you do is you host office hours. Is that a part of those live sessions here in the program, is a chance to jump on and talk about themes from week to week? Could you tell us a little bit more about office hours and how those are conducted?
Definitely, yeah. Generally with office hours, I want to leave it open to any points people aren't understanding as well from the curriculum, or any points in the assignments that aren't really sticking. But I think it's a great way for, if something doesn't make sense the first time around, coming back to it through office hours and getting another look at it can be a really helpful way of understanding it. I've always found that throughout my education, being able to revisit something in person can be a really helpful way of solidifying your understanding.
Talking it through with other people, helping you to really gain that hold that you need on the concept. I love that. I also love the idea of being able to be the driver of your own learning experience a little bit. We know this works really well for adult learners, but let's say you discover a niche area of interest, or you want additional resources or additional knowledge about a certain topic. Office hours becomes a great place for folks to come in and really gain that individualized learning here in the program and keep the program vibrant and relevant and current. So office hours play a really critical role in these live sessions as well. So with that, I am going to share back the screen and talk a little bit more about next steps for folks who are interested in learning more about this program or taking the next step and starting that application. We want to provide for you all of the information you need. We want to make sure that high level of engagement and support and interaction in the program begins right here today with viewing this session and getting connected with a program advisor. If you haven't already gotten connected with a program advisor, they are a great resource. They are the course experts when it comes to all of the policies. How do I earn that certificate of completion? What's the evaluative criteria for the program? These are great questions for your advisor. They can also help you with the logistics. When does the course start? When's the next date for the course? What have past participants had to say about the program? Any of those logistical types of questions. When are the live sessions being scheduled? They can help you with those. And then, of course, registration and enrollment. That's the stage you're at now. How do I begin that application? They can walk you through that process. They can also help you understand some more about our flexible and transparent payment options, special group enrollment pricing, our generous 21-day refund policy, and a lot of other important details about the registration and enrollment process. So please do get connected there with a program advisor. If you haven't done so in the chat, you can go over to the course website. You'll see the link there in the chat box to the course website. There on the page, you'll see you can click the Apply Now button and begin the application, or you can schedule a call with an advisor. You can also download the full course brochure. That brochure contains everything we've talked about here today and more. It's a beautifully designed and comprehensive overview of the program and a great place to get started if you want to study ahead. Download that brochure, get familiarized with the program, connect with an advisor, begin the application all right there from the course page. We are so glad that all of you joined us, so thank you for being here. Last chance for any questions, put them in the question box now. Otherwise, grab the link over to the course website, and we hope to see you back in one of our programs. So with that, one final opportunity, Declan, I would love to hear from you. Any final words of wisdom or words of advice that you'd like to leave folks who are interested in joining this program?
Yeah, I would just say the faculty at Columbia Business School are really outstanding. So we'll be learning from really some global thought leaders in this and great teachers as well. And I really feel the content in this course prepares you well for real estate investing, as well as being an enjoyable and engaging experience. I think you'll really come out of it prepared for the real estate investing landscape.
Great. Thank you so much, Declan. It's been an honor learning from you about this program. Thank you for sharing your knowledge and also for your teaching of this program and support here. And to all of you from around the globe who've joined in, thank you for being here. It's been an honor learning shoulder to shoulder with each and every one of you. And as I mentioned before, grab that link out of the chat over to the course website where you can get connected with all the support and advising that you need to get started. Thank you again all for joining. For now, we leave you with a heartfelt good morning, good afternoon, good evening, and good day. Thanks again for joining, and we'll see you back soon. Bye-bye.